All right, think I'm live now. Sorry, kid busted in. Morning, everyone. ES down 1%. Nasdaq down over 1%. We talked about this yesterday. Interestingly enough, hitting that Bollinger Band for the arguably the first time yesterday. I guess second time. Breaking it today. Usually get further downside action. We noted last time it happened over here. We went straight down for a bit. And if we break this support here, we do have a measured move which takes us down to the 65.42 level on the NASDAQ. That seems fairly, I don't know, kind of warranted at this moment in time, to be honest with you. Still firmly above the lows from last December. It's hard to believe we're coming up on base almost a year. We're about 10 months away from this particular point, and maybe about to at least do a somewhat repeat. That would do a higher low, so this is easily within the realm of possibility. There's nothing stopping us from going down here per se right now. A lot of manufacturing data came out yesterday. Didn't prove to be very good. Actually, the worst in 10 years. And maybe we can look at some other indicators as well. We said we would take a look at market corrections. And see how the market behaved in the past. Let's look at corrections and recessions. All right, list of recessions in the U.S. I think we've done this once before, but not in this context. Let's see this list. I'm just on Wikipedia. There's a Wikipedia list that I found. Just list of recessions in the United States. And okay, so time since previous recession. Okay, so this one, yeah, see a lot of these are older, 50s, 60s, one in the 70s, two in the 80s. So it's been a long time since we've actually had a recession. I'm not sure exactly how the recession versus the exact market dates are going to handle it. Hey, what's up, Rob? Yeah, I think you're going to get. I think the market's a cash situation right now. I'm not sure if we move to. That's one thing I should have looked at first is see if IBD has us in uptrend under pressure or correction. What happened to my thing? Okay. So let's see if we moved into a correction yesterday. Probably did. Oh, you're still under marketing? Haven't gotten there yet, but it looks like they're still in under pressure. How can you have uptrend under pressure when you have two distribution days increasing? You guys are idiots. Stupid. Stick with your effing system or shut up. NASDAQ with a head and shoulders on it. Doesn't look very good. Whoops. So what's the percentage here from the drop from this point? It's about a 16% drop. So could be potential getting to shorting opportunity time. So 16% drop. If you do the SQQQ or short the TQQQ, that should equate to It's because it's too early. I don't feel like carrying the 164% drop. That's not right. 16 times 3, 48% drop. What are you in, Russ? Something like this. So that's our handle from this cup and handle situation that we're in. We're still in it. It's not looking very good though. It's looking like it's going to want to take us out outside of the Bollinger Band range. Bollinger Band range. Online brokerage crash. Let's see what these brokerages are doing again today. Okay, not too bad. 1.85%. E-Trade only down 2% this morning. So nothing too crazy. All right, 1.09%. Let's see what else we could look at today, since we're kind of going into correction mode yet again. Seen a lot of corrections lately in the market. Doesn't happen that often. There's been a lot lately. I'm not sure if we've seen. Wish we had William O'Neill around. Man, look at all these MJ stocks down here. Hexo, ACB, Tilray, Cron, NBEV, CGC, all within mouse clicks of the bottom. All down at least 5% today for whatever reason. They're still just spending money, money, money. Greens are led by the 3 times Russell 2000 short, the TZA. Pays support off the 200A. Roku hasn't dropped much further than 100. That's acted as quite fairly firm support. Edwards Life Sciences looks very nice, just hanging out up here. Yeah, I think that the profits aren't showing up. They usually go by either the sales have to be really robust and through the roof, or the profits have to be robust and through the roof. If your if your sales are super robust, they'll give you a pass on the EPS, which is profits. But if your sales are good, they won't give you a pass on the profits. Not in most instances. Man, P&G straight up crazy. Atlassian with an H pattern. Trying to see if there's anything good. Let's take a look at the large cap guys. Take a look at Apple, Microsoft. How's Apple doing today? IBD was mentioning yesterday Apple was holding up, which probably isn't very good. Microsoft breaking that support. That doesn't bode very well for the for that. All right. Hold on a sec. You can tell it's cooling down. Allergies are starting to come in again. All right, so Microsoft not looking too hot up here. Starting to break down a little bit with the index. So it's really starting to take it on the chin. That Nasdaq's got a fairly clear head and shoulders on it right now. These haven't necessarily worked out the best in the past, but the target for this one isn't out of the ordinary. It's definitely within strike range. We talked about that earlier, so I think that's a thing. Microsoft breaking down not so good. It's not broken, but it's barely starting to break down. Apple with a little bit of topping action. Let's take a look at Facebook, breaking the 200-day moving average. Also head and shoulders pattern, which is already broken. And we know that Amazon, also with a mini head and shoulders pattern, broke the neckline, looks like last week. Continuing lower here today. One thing I'm always looking into is Tesla, just because love Tesla. Holding up pretty good here considering where it is overall in the chart structure. I'm really not too mad at it. It's not selling off. It's doing its own thing, which is really good. Actually has a nice bull flag. We'll see what the market thinks about Tesla, but the way it's behaving right now looks good. Looking like we may be able to hold up 180. If we get a market correction, this will obviously be sold off as well. The best case scenario is it's a lower volume sell-off, but the short sellers may step back in if you start to see some selling coming into Tesla, pushing that price lower, so 180 may not be safe. But really not mad at Tesla. 255 appears to be your line in the sand at this moment in time, so nothing to do until then, but I mean, fairly encouraging. Market's down another tenth of a percent right here, so let's look at the SQQQ, which is short the Nasdaq, and lots of buys here recently. Wow, that's a tremendous amount of buying. Buying there, buying there. We could be in a situation on SQQQ. That would be about 38%. We mentioned it was what, 46%, 48% to our measured move target here for the head and shoulders pattern. So that's doable. That's doable. That's quite a bit of volume on this break right there, and they never covered it. They never covered it. So that could just be getting started with that much volume right there. Supported it here at 30. Which probably meant they ended up selling off other stuff. So when you have bearish ETFs throwing massively bullish signals, I don't remember seeing that before. Could be a thing. All right, what's moving down on our action bills here? INMD still firmly lower. MJ down another 4%, just dying on the vine here. 25 down to under 20. That's not good. HuyaMatch.com firmly lower. Snap breaking. Looks like it's breaking everything at this stage of the game. We are looking like a general correction is coming in here. I will say that. I would not be aggressive with longs at this point. Kiwi, CRM. We have noted, though, the market likes to throw us around, so if we get another aggressive update, that could be an opportunity to maybe play shorts if you want to do that. Intuit, BLD with a chink in its armor. Not much of a chink, but a little breakage. ESNT broke lower. EPAM. Starbucks, again, firmly lower. A good reason why you want to take those. Well, you can't wait for bounces, because sometimes it just doesn't bounce. And there's a prime example of a stock that just never bounced. He had one little bounce right there, and it was very short-lived on Starbucks. It's a shame. Waste a chart. Booking.com, OKE, Winnebago, Court, Constellation Brands, not broken yet. No chink in the armor yet, assuming it will come up if the market falls apart. Transports, you mentioned how transports are important. And look at yesterday's action, the exact opposite of what we were hoping for. We were up here, and then we started crashing, and the transports never let up. Very aggressive, cutting through recent lows, and gapping down this morning. Definitely accounts for another 10%, 1.3% now. We opened down 1%. Now we're down 1.3%. So not good. And you can argue we're basically running lower, and the volume isn't even elevated yet. If we start to see elevated selling, that's going to be dangerous. Next PI, Disney. VXX. What's your alert at? Should have been here, but that would have triggered earlier, Russ. Volatility is up, as to be expected. Like in the past, we've seen runs up to 30 here. Can't imagine that's gonna probably be blown apart if we end up breaking. You could see volatility up higher. Hey, what's up, Jake? Everyone here for the market falling apart. So yeah, 30 looking like a pretty good potential here. Oh, Robinhood alert. So it's half an hour behind. Hey, what's up, Brian? Everyone is coming out to watch the markets fall apart. So move up to 35 here. It's about 37%. Doesn't seem like it could be too out of the ordinary, unless we got something else coming up that I'm not aware of. But I don't think the talks are going too good. I don't think. I mean, I don't know if Trump can tweet his way out of the manufacturing data. They're just taking a lot of risk off the table here. TD Ameritrade cuts to zero, matching Schwab. Wow. Ooh, Interactive Brokers also did it too. Wow. Good for us. That's crazy. Robinhood did this. Yeah. Yeah, that's bad for Robinhood. They caused it, but they're going to go away because of it. You're not going to panic sell your Netflix? Don't think you have to panic sell your Netflix, Jake. I just can't see why you have Netflix, if I can be honest with you. Not a lot of bullishness in this chart since we broke that 340 level. That was kind of my range I had, and we just gapped firmly beneath it, and firmly beneath pretty much everything at this point. Oh, you bought down there. All right, just have your stop in place. What made you buy down there? It's an interesting area to buy. All right, so here we were talking about this yesterday. TD Ameritrade CFO said the fee structure will have a 15 to 16% impact on quarterly revenues, which actually isn't that bad. B of A says TD Ameritrade generates 28% of its revenues from commission, and Schwab with 8. Well, how do you do that, Jake? What's your methodology? If you're good at bottom buying, I wouldn't mind learning something. I'm not a good buyer of catching a falling knife. That's for sure. Just volume on 5-minute charts, or you do what I do. What'd you buy in the open here or the close over here? On the 5-minute? Yeah, I've actually noticed that could be a fairly good bellwether of tops and bottoms. We talk about that not in depth, but every once in a while I say, oh, this looks like this could be the bottom for the day. I've done that a few times. It's worked out pretty well. Cool. Well, good job. Yeah, again, just have your stop in place, because there's oh, Bitcoin bounces really well. Yeah, it's a thing. High volume bottoms is a thing. That's how the whales get their positions. They end up creating the bottoms. Almost 1.34% now. Oh, just bounced to 1.35, but firmly lower here. Lots of selling pressure just stacking up. I don't understand how we didn't go into a correction yesterday. I'm gonna call IBD out. I'm thinking about starting a more generic YouTube channel, but I think I'm gonna call IBD out. I'm calling IBD out. I'm going to do it on my Real Crypto channel, so I actually have an audience. Like, what are you guys doing? I know it's hard to go on without William O'Neill, but you guys at least got to stay true to the system, which I don't feel like they're doing. I feel like some of their analysts don't know what they're doing. I've seen plenty of instances of missed calls and chart patterns and stuff like that. World Trade Organization rules in favor of U.S. in Airbus dispute, paving the way for tariffs on $75 billion of EU goods. Or is this going to be a tariff-driven economy now? I don't think that can drive an economy, so that's not going to be a good thing. All right, let's get back to what we were originally doing before I got caught up in the whole general market drop, which is still fun. Okay, let's look at recessions post-Great Depression, because we probably have some charts on that. They look at VIX. We looked at the VXX for a minute. Hey, what's up, Eli? See, everyone's coming out of the woodwork for the market drop. Oh, market bouncing 1.25% now. We looked at the VXX. Yeah, definitely bouncing up a little bit. I agree with you. It's fairly annoying. It's one thing when the market when the market gets choppy like this, it gets old because it just takes such a long time for at least in crypto, it plays out in like a couple of weeks usually. In stocks, um, hello Justin. In stocks, it can take weeks, maybe months, sometimes years for the stuff to play out. So it does get a little long in the tooth. I'll definitely agree with you there. How you doing, Eli? Still slammed at work, man? How was your Rosh Hashanah? Selling option premium make a little on the chop. I've thought about it a little bit, Russ. In my Roth IRA, it takes quite a bit of margin. I have to cover it with cash, so it's kind of piss poor performance. But I've been loosely looking into it. I was actually thinking today. I was looking at that Microsoft, looking at Microsoft, thinking that's pretty close to this 140 level. So I was looking at that for a minute. Because if you look at Microsoft there, you could probably sell a 145 seems like a really safe bet, or 142.5 seems like a really safe bet, but you can probably go to the 140 and do okay. Oh, it's a day of repentance. So you just come out of it depressed. All right, so what's your general profit on something like that? Like 10, 15% or something? Flip in a few days. Yeah, I wish I could. Wish there was a way I could do margin in my Roth, not so I could leverage trade, but so I can actually cover some of that cash they make me hold. I end up with very slight profits um, with a small position, but I can't do anything else because it's just completely used up. All the margins completely used up. No, he's talking about writing options, Eli. You're correct. Yeah, not in my brokerage. I got E Trade and it doesn't work that way. I could take two positions inverse of each other exactly, and it still wants me to do full boat option, covering with cash. It's kind of weird. I should call them about it. I haven't called them about it just to make sure that's right or something. All right, let's go take a look at some recession stuff. We were going to start doing that. Mentioned we would do it yesterday. And so let's go try and do it. Yeah, it's weird, Russ. I don't understand it. It's like, why do I have to cover with cash if I have the exact same? Just don't let me close the other position. Something. All right, so let's go take a look at some recessions. Um, yeah, I remember that, Eli. I remember that from what you were saying. I've like when I did my GE trade, I basically made sure I was covered on all sides. So it's funny. My Starbucks trade probably would have been another good. Probably would have made good money on the opposite side of that trade too. Yeah. Market finding some support. 1.1% down, 1.15% down right now, down from 1.4. So that's a little bit of support right there. I don't think we're going to be able to go through the rest of the day upward, but we'll see. All right, let's get checking out this Recessions. Okay, so there's only been a few recessions that we probably have stock charts for, at least on my platform here. If you look on Wikipedia, which I have up here, you've got the Great Recession, 7 to 9. You've got the early 2000 recession. And then you've got the 1990 recession, which is early 1990s. So you can see there's quite a bit of gap between recessions. And I'm not sure if I'm going to be able to get to 1981, 82 on my chart, but I'll do my best. And we're probably going to have to look at the S&P 500. I'm not sure what instrument to use. Don't think the SPY goes back that far. I know it goes back to the first one, probably the second one, not the third one though. What do we get here? Okay, back to 1993. Yeah, so we won't get to the 1990-91. So the actual recession, we could look here from the actual recession from the early 2000s. It was March 2001 to November 2001. It was very brief. So we're going to go, don't I get a vertical line? Thought I got a vertical line. There we go. Okay. So March 2001. So this is, I'm in the 2001 year block, and we're going to look for March. I got to do it all the way up here. Okay. So it was March 2001 to November 2001. So an eight-month recession. We didn't have another one for 10 years. So November 2001 would be here. So that's our recessionary period right there. And you can see we started selling off well before the recession. We sold off in August. So that was what? 7 months before the recession actually happened, the market began a sell-off. And that happened to be the top. So a couple of theories around here, and I don't know exactly what's what. I'm not even sure if economists can tell you what's what, because honestly, economists don't know that much. I've always been a little interested to know if the stock market causes recessions, or if the stock market leads an actual recession that is in and of itself outside of the stock market and its influence. What I mean by the stock market and its influence is the fact that your largest companies probably reduce spending, which may cause the recession. Interesting, huh? All right, let's take a look at 2007, 2008. December 2007, which is going to be here. Now this one, I'm pretty sure it's easy to know what caused this one, to June 2009. Oh, and another thing is we always bought them before too. So I've said this in the past, but just to kind of confirm it on the charts here. There we go. Oh, it makes a full line anyways. So there's our second recession. And obviously this one's a little bit different. This one was the banking sector being obliterated, causing the rest of the economy to not be able to do stuff it needs to do. Banks weren't loaning money, and it just got really bad. So the preceding sell-off wasn't arguably anything. You can argue this is not even a top, and you would probably be right. But the actual economic recession, and see, here's the thing, is it's the actual economic recession. I want to give you guys another recession indicator. My wife actually publishes a publication on construction throughout Arizona. It's Arizona based, but she does the really big construction projects. And a lot of the capital improvement projects have been slashed, actually canceled and replaced with smaller. And so she's actually been calling for a top in 2019, which she's never told me until yesterday. And she says she probably, I'll get with her. I'll get with her on that. Maybe I'll make an actual video about this. But so she tracks this stuff, and she says it's a pretty good economic indicator. I'll get some clarification for her on that. But so we definitely could be going into recession, even based on those construction projects. And that can have a little bit of a trickle effect throughout the economy, at least in the construction industry, because it goes from major prime contractors to subcontractors to the suppliers of the subcontractors. So it can have a trickle effect all the way down throughout the economy. So these are the two ones that we have here on this particular chart. And in 2007, it came on really fast. We really didn't know much about it until it happened. And that was due to the banks shutting down. I'm assuming this is going to be our more normalized model. Now, interesting here, we actually didn't bottom. We continued selling off. Not sure why that is. I can't give the answer to that. But we had a minor recession here, but the effects, probably combined with the bubble, were lasting. We're lasting here. So that's the SPY, and none of these little corrections are recessionary in here whatsoever. So the recession here really is the key to everything, to one of the reasons why this dropped so far. Or the recession was the result of the drop. That one we don't know. Same in 2009. This one, see, here's the thing about the bear market. Everyone calls this the bubble, the bubble thing. And yeah, I get it. It was kind of a bubble. But it kind of, it was and it wasn't. Like, you had this internet sector that was booming, but that wasn't, I'm not sure what percentage of the market that was, but I can't imagine it was like 70% of the market. It was maybe 10 to 20% of the market. It wasn't a huge amount of the market. And then you end up with the bubble bursting, and it's going into like a 2-year deep bear market. Our recession, as you can see, was only 8 months. It wasn't a very deep recession. The economy got better, but the stock market didn't. Very interesting dichotomy and interesting action. By the time the recession ended, the stock market kept falling. I find that interesting here. Okay, so the next one is the early 1990s recession. I can't get that here. I doubt the ES goes back that far, but we'll give it a shot. And it does go back that far. Okay, so we don't get volume. This goes, it doesn't go back that far. Ooh, not 1990. We also stop in 1993. I wonder if they only give us like 24 years of data or something on TD Ameritrade. So SPY, S&P index. Let's see if the SPX, let's see how far that goes back. All right, now we get some data. That's what I'm talking about. Nice. Okay, I'm happy about that. All right, so now we're going to 1990-91 in our time capsule. I'm doing a reading railroad episode here today. 1990 to 1991. So July 1990. Wow. The recession hit and we just dropped. July 1990 to March 1991. Oh. Never mind. No, that's right. This is 91. Okay. Sorry, I was second guessing my my reading abilities. Very interesting here. March 1991. The longest holiday in history right there or something. All right, so the U-turn recession. Right there, we bottomed out pretty quick. And there we go, 3-4. Okay, so that's our recession. And oddly enough, so far each recession having a different price action relationship to the recession itself. And actually, I should go paste these other. I should go do all these on the SPY here. 719. I probably will have to go here pretty soon, but I really don't. This is pretty fun. Okay, so let's do the Great Recession again. We're going to do December 2007, which was like here. And then we're going to do June 2009. Bam, right there. So that's recession 1. This one with slightly different signature. Really no lead up time, and did bottom before we ended the recession. We're going to go over here to 2000 into our micro recession that ended up in a crazy bear market. March 2001. Using the wrong tool again. And then we're going to end up with November 2001. Right there. All right, so this one with a leading sell-off and a sell-off all the way through the recession. That one also coming out of the bubble, so maybe that's what made it different. This one, a U-turn recession. We sold off into the recession, but there was probably some indicators indicating we were getting out of it or something, so we ended up rallying out of that. Before that was 81, 82. We missed you, Rob. We were wondering where you went. Okay, July 81. To November 82. All right, this one also bouncing prior to the recession and slight lead sell-off. And then the 1880 recession. That's a recession. Next one is January 1980 to July 1980. Come on, I'm clicking buttons. Do something. To July 1980, and then we had 73 to 75. November 73 to March 75. Getting good at this. This one looking similar to the 2007 2009 recession, where we bottomed prior, had a leading sell-off. Well, this isn't like that, but bottoming prior within the recession, bottoming within the recession, bottoming within the recession. Okay, so let's keep going here. So these, keep in mind, this is the actual recession time. We have December 69. To November 1970. And we have 60, 61. April 1960. To February 61. And this seems like a non-eventful recession. Very non-eventful recession. Dropped a little bit, but not a tremendous amount. Hi, James.
Daddy,
Yeah.
can you brush teeth, please? I said, can you brush teeth, please?
I heard what you said.
You did not hear.
Can you, do you have socks and shoes on? I need you to get socks and shoes on. Because I probably got about 10 minutes left here, okay? All right, so let me go back prior to that. 59.60. And then we have about a recession every few years, it looks like. We've done a much, I don't know about better job of managing it, but much different job of managing it. All right, 58. April 58. To August 57. AMD filled the gap down. Nice, Russ. Nice. MDCO positive, oddly enough. 57, so 50, 53. So July 53. To May 54. That was an interesting one. Probably the economic expansion after the war just taken over right there. Look at that market doubling. Boom. About 5 years. That's awesome. Right, October 49. I may do a static video about recessions later. It's kind of interesting. February 45 to October 45. That one didn't care at all. That was post-war right there. Or during the war or something. Oh, man. World War II. So, man. Really hope we don't have another world war like that. 37 to 38. May 37 to June 38. That was a pretty bad one. This was the one after we bottomed. That was a pretty deep bear market right there. And then we get all the way back to the Great Recession or Great Depression. We've made it. Whatever that means. August 1929. Bet you this one hit like a ton of bricks. Of course it hit like a ton of bricks. Yep. Didn't even have a chance. See, that's a bubble. And then March 33. My man. That was so long. March. And then we did bottom before. Close enough. So there's our history, guys. You've pretty much charted You've charted every single recession since the Great Depression. And we may be going into another one. But how's it going to play out? We'll do a little more research tomorrow, guys. I got to get out of here. Help the kids get ready for the day. Let's get back to the general market. Down 1.3%, so it's reversing lower once again. Russ mentioning AMD filling the lower gap. Huh? What gap are you talking about? Oh, this gap down from the day. Gotcha. Okay, that makes sense. Yeah, AMD here with kind of an H pattern. We noted about a week ago when we poked down that we were starting to break support here. And it's been choppy, but it's been, it's been what it's been. 1.4% down now, so probably going to continue with further downside action. Starting to feel a little bit like a 5% down day. I'm not calling for that, but see what the 5-minute chart shows us. Nothing good. Nothing good right there, that's for sure. Whoops. So, all right, ladies and gentlemen, I got to get out of here. Have a good day. I'll see you tomorrow. And stay safe out there. It could be pretty brutal. All right, bye-bye.